Right, welcome everybody. Hope everybody is well. It is Tuesday, the day after the bank holiday, so should be um should be a good day today. Should have a bit more liquidity in the market. Let's obviously go through the news before we start anything else. We've obviously got a bit of mixed reactions so far leading over from yesterday. However, we do have consumer confidence later, so it is a little bit later on 3 p.m., but that's going to be quite important. That is obviously the confidence that consumers have in the US economy now. So it should be pretty interesting. Uh, then got this one here. We have then got. Let's just have a little bit of an update here on obviously what is happening and why. So I had a good day, yeah, yesterday, pretty slow. But obviously that was what I was expecting. I wasn't expecting a crazy day. I'm just happy it's green and it's got us off to a good start. So, really happy there. So yeah, should be good to obviously lead on and continue. So. Right, let's have a look at what we are looking at this morning and why everything's going our way. Perfect. I'll post that in a bit. But, looking at obviously what has happened here, and I think yields is the most interesting chart. Obviously, it wasn't running yesterday. We were expecting this gap to happen. However, I do see this closing. The only interesting thing for you guys is remember our what we spoke about on Sunday, our amber zone. I move this down. So we're currently trading out of amber. It's still obviously holding. We're still in the danger, zone of, yield kind of territory here. So yeah, let's wait and see obviously what happens here. So that was our kind of traffic light, system which we were working on, Sunday evening. So I do see yields recovering a bit. One interesting thing from yesterday was how well dollar held this area here, held it really well, really well. Really struggling to break through 99. We've obviously got these lows here. So yeah, it will be interesting to see what happens. We do have a gap to close. It is a bit of a, myth that obviously the gaps always have to be closed. However, it is a high percentage that they will, but it's not 100%. All right. And so everyone kind of write that off. Where, out of your brain that it will always close the gap. That's not true. So yeah, need to obviously, yeah, make sure that, yeah, you're aware of that. Now, looking into obviously the pairs we're trading today because of this, all right? And so, we've obviously, when we're analyzing risk, and obviously this is one thing that we spoke about on Sunday, we want to look at the stock markets, all right, all down 0.5%, 0.3%, 0.4%. Then we want to then we want to look at oil, which is the interesting one here, and I've left it up on oil. We're obviously still trading above that, 90. It's holding. Um, However, it is down 0.5% here, but still holding this area. So this was obviously the area that we wanted to break. And obviously it seems like it is holding. So yes, oil has dropped in price, especially from say last Tuesday, we were back up about 105. But obviously, we're now trading, testing this kind of 90 area. So oil obviously acting where it is, still will have that inflation worry, so yields also looking to recover. So my kind of highest probability is to trade with the dollar today, so that's obviously what we have done. We've got obviously USD, AUD USD here, pretty nice trade. If we could go on a 15-minute time frame, we've obviously got our three entries here, one, two, three, I actually triggered these manually this morning because I was, just monitoring. I think I missed out on this one, so I just wanted to enter when it was going to come back and retest. And obviously, good job I did. But no, really, really, really happy. So got off to a good start here. Pound, brilliant. That just tapped me in. So that one, obviously, remember we've got our three entries, one, two, and three. All right, just tap me in and obviously coming to the downside here. So pretty happy with that one. Euro, I wanted to stay away from. It's a little bit slower. It's not quite trending as much. You can see this price here, obviously, from Sunday evening to where we are right now, and obviously it's only just made this low here. We've got 25 pip range there, so it's worth just letting movement free up a bit, and obviously, making sure that we're you know allowing that to happen. Gold, I really, really liked where gold was. I just wanted it to come back up and retest into this, zone here. I could have probably been a bit more aggressive, but I'm obviously happy. Happy to, tread a bit carefully with gold. I'm aware that obviously, Sunday we had this huge candle here. So yeah, price action wise it's one of those where I'd rather play a little bit, safer. And obviously USD JPY looks horrible. We had a day yesterday where we obviously came all the way right down here, and then as you can see here today, we've come all the way back up again, so horrible, like it has been. So I'm going to be staying clear of that one. Apart from that, yeah, it's just going to be letting obviously London session do its thing. I do think we're going to get a bit of a continuation on the dollar. I do think we're going to get this, strength and potentially target this kind of zone here. Um, that's what I'm expecting. So yeah, let's wait and see what happens here. But yeah, that is a bit of a roundup of what I'm looking at today. Like I'd said to everyone, I wanted to sort of on bank holidays, you want to lower your expectations, slightly. So when you're obviously, normally say targeting 1% a day, you might want to halve that and target half just to kind of take a bit of money off the table. And obviously, I think yesterday proved really, really well why we've got the three entries. All right, because liquidity is smaller anyway, and obviously coming down and triggering these two before having that continuation, it happened on us GBP USD, AUD USD. It just obviously helps you to gain that extra entry when markets are kind of moving slowly, and obviously that's one thing that we work on a lot. Remember, we're almost scattering entries, so we're trading everything against the US dollar, right? But then we're scattering entries across, right? We've obviously got euro, we've also got pound, we got yen, we've got Aussie, and then we've got gold, yeah? All right, we're obviously scattering our entries, trying to get the highest probability because everything is going against the US dollar, yeah? Then not only that, we've then got three entries on each. All right, three entries on each. We're picking our top three, getting rid of the other two. So, you can see here how well it, works because obviously we've gone for GBP, we've gone for Aussie, and we've gone for gold here. Right, we're really, really, scattering entries, scattering our chances of, all we're trying to do is capitalize off of the US dollar here. All right, we're not trying to reinvent the wheel or anything like that. It's just purely just trying to, capitalize as much as we can. Obviously, that's why it's been working, so well. So I'm gonna see what I do here. I might pull stops to break even because I don't really like this candle here. There's a lot of action here, and obviously a big push up considering we've crushed through obviously this area here. So yeah, let's wait and see obviously what happens here. But happy, and obviously I would keep you guys updated. Right, does anyone have any questions? Let me have a look at some of these. Alex, do you use US 2 year yields sometimes as an indicator, or always 10 year? No, no, no. To be honest, I just found them a bit confusing. I think you can do everything you need to do with a 10 year. The most important thing with macros, and I did go through this rabbit hole, is the most important thing is not over complicating it. It's using it to your advantage without over complicating it. Greg, your stops seem tighter today. Not complaining, just interested. So yeah, I wanted to keep everything a bit tight. What have we got here? We got a 27 pip stop on GBP. We got a 14 pip stop on Aussie, and we've got on gold. I think that's a normal stop. Yeah, about 160. So I, I always place my stops in a spot not because of how many pips they are. All right. I'll always place them, because obviously this is the, high here. And let me draw a straight line because I don't know why I can't seem to do it this morning. So this is our kind of high here, right? So the reason mine stops here is because if this high breaks, then that's going to show a trend continuation. Yeah. So if the trend's going to continue, our move to the downside is off the table. That's why I call it an invalidation as opposed to a stop. Same here. If this area here breaks, if we come up here, then I don't want to hold this longer. All right, because our trade to the downside has been invalidated. Gold, I've kept it a bit t tighter because yeah, I'm looking at the kind of top of the liquidity here. So if this breaks, yeah, I'd rather than hold an extra, 200 odd pips, I'd rather just yeah, cut out protect capital. Euro would be a bit difficult because probably entry might be about here, and then stops would probably have to be about here. So quite a big stop. And then yen, we'd obviously have to go with it, but obviously stops would have to be down here, probably even a bit lower actually. You'd want to get rid of these here. Probably entry would have to be somewhere here, you know, um, because it would then invalidate and then obviously change, So that's how you've always got to look at a, stop loss, right? Don't look at it as right, you know what, every time I trade, I've got a 20 pip stop loss. So I've got a 20 pip stop loss and then I see this so many times. Oh, let's just get rid of that. So I've got a 20 pip stop loss. Do you know what? I'm going to do this by hand because I can't think this morning. So I'd see lots of people do this where they'll have a 20 pip stop loss and a 60 pip take profit, 1 to 3. That is how I trade. But there's no reason why this, should be here, as opposed to obviously pound, we're targeting this area here only. All right, this lower level of liquidity here. If you're trading like this, it's not going to work. Your stop loss is in, no man's land here. You could see this trade trigger you, come down here, test this lower level, and then come straight back up. And then just because you're, strict on your, stop loss is not a clever way to trade. Whereas, yeah, if your stop loss is down here, right, and then you're kind of looking around here, probably targeting maybe 160 if you wanted to. That makes complete sense. All right. Because if these break, yeah, trend's going to change. This trade is completely invalidated, So that's how you've always got to be looking at it. Don't put your stops in a stupid place, and obviously don't put your TPs in a stupid place. I do think TPs are subjective anyway, but yeah. If we're not already in GBP, should we enter now if price comes back up as you're moving to break even? I'd probably hold off at the moment. You don't want to be entering down here. You could potentially enter somewhere here. But yeah, I'd probably hold off. There's plenty of trades. We obviously have three trades in the morning, three trades in the afternoon, Monday to Friday. Six trades a day. That's 30 trades a week. Potentials. There's plenty of options. All right. So don't think that there's, you know, don't feel that FOMO that there's not going to be another trade. By all means, leave this one open. I'm going to, leave it open because I don't think there is enough to push it past here. If anything, I'd love it if these two triggered and we come back down here. So don't obviously, yeah, worry about trades not triggering. That's, the worst kind of habit to be in, because you don't want to be kind of, yeah, worried about missing out because there are, yeah, like I'd said, you don't ever have to worry. Three trades in the morning, three trades in the afternoon, Monday to Friday, 30. There's plenty. So yeah. No, I'm not cancelling anything yet, but you can if you want to. So yeah, right. That is about it from, me. I'll keep you guys updated throughout the day. I am traveling back up to London this morning. So I'm going to leave about 11. So don't know if I'll be able to post pictures with the trades a bit later on. Because I'm going to do quite a lot, well, a lot more prep this morning, and then obviously I will yeah, have everything pretty much ready, so I can do everything from my phone. So that is the plan. But yeah, yeah, I'll be driving over the 130 trade. So or I try and normally I try and pull over, but obviously my internet's not great. So yeah, but no, have a great day. We're obviously back in business. No obviously need to yeah, worry about anything. We're obviously on it and we're just going to keep ticking away. Another green week. It'd be good to finish May nice and strong. So have a great day, everyone. Weather is still epic, and yeah, let's absolutely smash it. Have a good one, guys.